Hi, welcome back, guys. As promised, we're going to talk fitness now. Talwalkers Fitness and Talwalkars Lifestyle posted a good set of numbers in the third quarter in what was seasonally a weak quarter. Anand Gawande, the promoter director at Talwalkars Health Clubs, joins us now to talk about that. Anand, hi, good morning and thanks for joining us. Always good to hear that there are more people hitting the gyms, right?
That's
but
true.
Tell us about the membership itself, exact numbers. What was the addition in this quarter and what's the target that you're looking at for the next year?
So we added approximately 8,000 members this quarter. But that's, as you rightly said, a weak quarter. So actually our headline for the presentation which we have sent to the exchange and investor is hustle for the muscle. So you have to hustle in that quarter. It was a lean quarter and we did not open too many new gyms. We did open one interesting one which is in Patna. So the state of Bihar is now with us, okay, after a long time. And we think the momentum really is going to be in the current quarter. Current quarter, we are planning to open almost 20 gyms in the next 45 to 60 days, thereabouts. We are targeting Pune and we are targeting most probably we will do some in New Bombay. All the properties have been contracted, equipment ordered. So we think that this quarter, using that as a momentum, we could do significantly better than the earlier quarters.
Actually, half this quarter is done, so
That
you
is
have some idea. Does it look like things are picking up or is there a dullness in participation?
So I don't know yesterday how did we do, because Valentine's is always a great day for us. So we tell people to gift a Valentine membership to their loved one, etc. But New Year opening scheme, we did 2-3 things. We added 1 week of free training. Then we also added a lot of personal training into it as inputted thing. So the New Year scheme did do quite well. I said Valentine is the second biggest occasion during this quarter because people just give 1 month the short-term membership, but they do it more often now. Online has been a surprising one. So 2 of the biggest sites, Grow Fitter and Fitternity, have started increasingly accounting for our sale. So people just take a jumble of memberships through them, and these 2 are the main online channels. And do help us a lot.
I wanted to ask you about Fitternity because it has the first mover advantage in that online marketplace, right?
That's right.
What are the kind of, what's the growth potential that you see from these apps, and will you be making any more such moves in the online space?
We now have our own app, but more importantly, we are on the 2 main channels, and in one of them we are already invested to, as well as in Fitternity in a different way. So both these are the number 1 and 2 player. Both are equally significant big. Though they are agglomerators, what happens is they create schemes for us. So sometimes just create a scheme like if you come for 30 days in a month, we'll refund your money. Something which is very interesting and nice. And then what happens is because these are online channels, the reach is significantly more than me physically reaching gym. I can reach 2.5 lakh people, 3 lakh, 5 lakh, but they can reach millions of people. So if I'm not mistaken, they do have millions of page views per annum. So both of them are run by young entrepreneurs, and definitely I helped the momentum of the company. I mean, if we were at 1 or 2% on online, today we have moved to about 15-18% on online. So that's the difference now.
Are you making more money per member?
Let me answer it differently. The new model of Power World, Lata, is a very low-cost model. So the pricing of that model is between 6 and 8,000 rupee membership fee, as opposed to Talwalkar, which is 15 to 18,000. So what will happen is increasingly you will see the bottom line holding steady, but the top line may not increase at the same pace because the membership fee does not go up. But at that kind of entry level, you are really not worried about people coming and asking for a discount. What will you ask at 500, 700 rupees a month? You are already there. So in Bangalore, where we opened 40 gyms in the last 2 years, we have close to 44,000 members in the Power World gym.
Okay.
So in terms of, expanding to newer cities, you did say that you're looking to enhance your presence in the top 10 to 12 cities and looking for expansion as well. Can you just tell us what the plan is?
Yeah, so the top 12 cities, according to our estimate of calculation, shows that they have a population of about 210 million people, that is 21 crore people. We believe that for at least every 1 lakh or 1 million people, we should have 1 gym. So that is 210 gyms of Power World category. Okay, and 210 of the premium category, which is Talwalkar. So that takes us to 420. We are at 250 right now. So that is our first target now. Okay, saturate. So Bangalore, we started with 5, then 20, then 25, now 45. Delhi, we were 0, now we are 20. Pune, we are going from 13 to 33 gyms. So if you see each city, at both the top end or middle end and the bottom end, we will be the market leaders now. So both the ends.
All right, Anant, we will leave it at that.
Thank you so much, both of you.
Good to hear that there are more people, paying in, even if it is at a lower price point.
That is true.
At least it's a healthier India.
Okay, let's move on then now and address the market. The Nifty is at the cusp of breaking 10,700 now, and the Bank Nifty has been very weak, without a doubt. It's being supported right now by ICICI Bank, but HDFC Bank a bit soft. Ashwini Gujral, Mitesh Thakkar and Sandeep Bagle now join us. Ashwini, yesterday's low was broken, so is that long trade still on, or is the trade now on the short side? And what are your stock calls now?
See, the market is hanging on to 10,700, but I think another wave of selling will come in. So the good news was that yesterday's low and today's low are fairly close by. So that way there isn't too much of a problem. And my sense is that given the way large stocks are moving, at some point we will get below 10,700. IT is doing well, so maybe Infosys, Wipro will hold up the other end. But overall, the market is increasing in momentum and fairly close to previous lows of 10,650 thereabouts. So the market is not looking like it's going to recover by the end. Having said that, Infosys is a buy with a stop of 738, target of 760. Wipro is a buy with a stop of 372, target of 386, and United Breweries is a sell with a stop of 1365, target of 1320.
Okay. Actually, just wanted to point out Jet Airways is up 6%, so people are clearly buying into the revamp plan. Good luck to them. It's also coming with a lot of dilution, but let's see if people want to believe that all that is already priced in, and we don't know.
And there's a new management. There'll be a complete change of hands, professionally led. I mean, that's something that a lot of the experts were indicating.
It's not sliding anymore. Somebody is trying to stop the slide of the business, but will that translate into share price slide stopping? We don't know. Mitesh, what do you think about Jet Airways?
It's kind of recovered from oversold levels, but not very positive. I think it needs to start stabilizing about 245, 250 zones to get some strength. Until then, I think this will only be classified as a pullback rally.
At the moment, what are you trading? Mitesh, first of all, are you trading the index? And
yes.
Which other stocks?
So I've been advocating buying into March series puts, given the fact that I've been highlighting that the weekly charts are now turning very negative. I'll just spend about a few seconds over here. I think today if we close below 10,800, which now looks a more stronger possibility than what it was in the morning when the opening happened, I would look at a minimum test of 10,660, logically a test of 10,480 to about 500. But the worst case scenario does look like a retest of 10,100 to about 10,000 levels, which have been a very strong support area. So I think I'm already preparing for that kind of a move, and that's why still advocating buying into 10,700 strike put options for March expiry. There are about two calls which I have right now. Godrej Consumer is a sell with a stop at 680 for targets of 645, and Shriram Transport Finance is a sell with a stop at 1040 for targets of 995.
Okay,
700 just given up, 10,700.
10,700 gone. In fact, I mean, it's still down but not out for the market. So down about 0.5%. But
left.
let's see. Yeah, of course, as of now. I mean, we talk for the moment, right? So we don't know how things will progress. But for now, at least it's less than about a 50-point cut that you're seeing on the index itself. Sandeep Bagle is also with us. Sandeep, I wanted your thoughts on how to approach a stock like Page Industries, because it has created a lot of wealth in the past for investors. What's the call now, and what are the stocks that you would trade at the moment?
Good morning, Sonia. I think we are witnessing a very clear breakdown. Any move towards 23 to 200, 23,400 should be sold into. In fact, even at the current levels of 22,800, I would recommend some selling. I see levels of nearer 20,000 in Page Industries. Stock specific, I have a sell in a Glenmark Pharma, stop loss of 595, target 568, and a sell in a Axis Bank, stop loss 696, target 663.
All right, Sandeep, thanks a lot for those trading ideas. Mitesh and Ashwini, thanks to you as well. By the way, just going through that auditor report on NPBeam, the company has given 122 crore loan to subsidiary companies. This is a fresh auditor qualification, and they're not sure whether this will come back. And that is a fresh issue which is emerging in a lot of these companies. So NPBeam, I think, is the latest one where this disclosure has been made by the auditors. So that's also something that you would want to keep on your radar.
Okay. Well, I think we can move to the next talk. United Breweries, that one posted a strong set of Q3 results, beating estimates on many parameters, all parameters actually. Volume growth 16% has stood out for the company this quarter. Shekhar Ramamurthy, Managing Director of United Breweries, joins us now. Shekhar, good morning. Good to have you with us. Just give us more color. The volume, what is the breakup? What were the products that did well? Did they come with higher margins as well?
Yeah, good morning. Well, we had a good quarter, as you've seen. One of the factors is that if you recollect, last year Q3 was not that strong. There were policy issues in Maharashtra, so the sale was down in that state in Q3 of last year. So that's one soft comparator which helped the growth. But leaving that aside, there has been broad growth across most markets, except West Bengal, where the steep duty increase last January continues to depress the market. We are hopeful that West Bengal also will start recovering, but as yet we're not seeing that. Plus, our new brands are doing well. Storm is doing exceedingly well. Ultra and Ultra Max continue to do very well. Heineken is doing well. So it's been a broad-based growth, both geographically as well as our portfolio.
Shekhar, hi, good morning. Congratulations on your numbers. This volume growth is looking pretty good at 16%. I mean, the health industry may not really take it very well, but nevertheless, for a company like yours, 16% is rock solid. Is it something that you're expecting in Q4 as well? And what's the outlook like for FY20?
Well, Q4, we're not probably can't predict growth as high as 16%. But as we've been saying over the last few quarters, we do see industry growth being the strong single digit, and we always hope to grow at least 2% ahead of that. So a 10 to 12% growth is something we do expect in Q4. And going forward into next year, we would say the industry will grow at about 7 to 8%. Barring any unforeseen circumstances. Q1 will be difficult because, as you know, there are elections, and elections bring a lot of disruption to our industry in terms of closure of outlets, restriction on dispatches, and so on and so forth. So April and May will be, which is actually the peak season for beer, will be impacted. But we're hopeful that over a 12-month period, the growth in the industry would be at least 7 to 8%. And again, we hope to grow ahead of that.
Shekhar, this quarter you will also have a high base issue, I guess, because fourth quarter last year you did very well. So let's not look at it quarterly. Do you think what is the volume run rate for the year, and is that maintainable? Is that what you're saying is 10 to 12%?
Well, this year I think our volume growth will be ahead of 10 to 12% because of base effect. But if our prediction is for the next 12 months, that is 19-20, industry will grow 7 to 8%, and we do hope to grow at least 2% ahead of that. So that's our forecast for the industry and how we hope to do.
Likewise on margins, this is a fairly decent improvement. Is this maintainable?
Yeah. Well, in our industry, margins are difficult to predict because it's a combination of brand, state, pack, and we have plans. We are hopeful of continuing to deliver good margins, and we also have a strong cost initiative which we've been talking about over the last 12 to 24 months. All that will continue. So our endeavor is to continue to deliver strongly on all parameters of volume, cost control, and margins. And what we have done over the last year and a half is also broad-based production of our premium brands. So today you have brands like Ultra being produced in about 4 to 5 breweries. Heineken is being produced in 2 breweries, and by the end of this calendar year, it will be 3 or 4 breweries. So bringing production of premium brands closer to the market also helps in margin delivery.
Okay, and finally, what's doing well? Is it the premium brands? Is it the non-premium ones? Just some color on, the price points.
Yeah. I always maintain that beer as a category is a premium alcoholic category. So, so moment the consumer chooses to have beer, the consumer has chosen premium because beer is expensive in India because of the way tax operates. But having said that, we are finding growth to be broad-based. Yes, our new brands are doing very well, like Amstel and Storm, because they have very low base. Our Ultra and Ultra Max and Heineken are doing very well. But so are Kingfisher Strong. So we're seeing broad growth across geographies, across brands, and we hope that this will continue. And our endeavor and our focus has always been on, like I said a little bit earlier, on all parameters. You need to have volume growth, you need to have margin growth, and you need to have cost control.
All right, we'll leave it at that. Thank you very much, Shekhar, for joining us, and have a great 2019. It may interest you to know that if you looked at the CNX 100 stocks, United Breweries as a stock is up 22%. It comes like in the top 10 stocks that have risen over the past 1 year. So that's an indication, even if consumption is weak, where the consumption is good.